Hello, in today's video we'll be taking a look at the stocks ETFs daily key levels V3.0 indicator from Day Trading GPS, along with the add-on indicator, the Day Trading GPS ribbon indicator with option for indexes, and how this ribbon indicator can also be used very effectively with stocks and ETFs. Okay, so in today's session we'll be taking a look at two different stocks. One is Bed Bath & Beyond, and the other one is Microsoft. Bed Bath & Beyond is one of the stocks from the Wall Street Bets group, who follows this as well as GameStop and many other stocks that are subject to short squeezes and very volatile moves on news. So yesterday we had news regarding this stock, which, as you can see here in the after hours, it started going up and it went all the way up to right about here, which was about $7.45. Then in the pre-market today, it ramped back up to this level. And as you can see here at the open, at the 9:30 open, it also was surging upward. But as you can see here on the ribbon indicator, we're getting a bearish signal right from the get-go by using the filter with this particular ribbon indicator, which is usually used for indexes with this stock. Now, if we take a look at the ribbon indicator with the filter turned off, then you can see this is what a regular ribbon indicator would be showing. So you would have looked at this and you have the green, all green ribbon here. You have the separation from the top of the ribbon starting to separate from the base of the ribbon. And so this would have gotten you into a bullish trade here if you were just using a regular ribbon by itself. However, with this particular ribbon indicator, you do have this filter that you can turn on, which resets it at the open, so it gives you fresh data right from the RTH open. As you can see here, this would have kept you out of a bullish trade here, and instead starting to look for bearish opportunities, especially considering that we did have a significant gap up, which was from this level down here at the 537 or so level here from yesterday. So we have a significant move starting down. And there were basically a couple of different bearish opportunities here. The first opportunity is a short off of the pre-market high level. As you can see here, the indicator's giving the standard stop loss for a bearish trade off of the pre-market high of 751 as a stop loss. So that would be here when you start getting this move down, you start getting separation. The ribbon is turned all red, and we're starting to get separation from the bottom part of the ribbon from the main part of the ribbon, showing extreme bearish momentum. The second opportunity would have been taking a short off of the R2 level here, in which case the indicator's standard stop loss for that trade off a short off of the R2 level would have been this midpoint R2, R3 here. So you have these two bearish opportunities from the get-go. You could have also just waited for a close below today's bull bear key price level, which was $6.99, which happened on this particular candle. In that case, your stop loss would have been the first midpoint above the bull bear KPL, the mid KPL R1. If you did not have this filter, then you would only be looking at this opportunity here as the beginning opportunity on the close of this candle here below the bull bear KPL. Now, one thing that you can do with this ribbon indicator is do a dual screen, which I'll show you now. Okay, so as you can see here, we have a dual screen. Basically, you just go up here and you do layout setup, and you go to a left-right dual screen, and basically use the same exact chart, except one will have the filter on for the ribbon and one has the filter off. Now, one thing you can do is you can wait to double confirmation, which would be both ribbons being in confluence with each other. If you're looking for double confirmation, the one with the filter off here, filter on here, and then on the right with the filter off, and waiting for both of the ribbons to have confluence with each other before taking an entry. So that's if you want double confirmation as opposed to just using a single screen ribbon with either the filter on or filter off. So this can give you a different perspective by using a dual ribbon, one with the filter on and one with the filter off, and then waiting for confirmation from both, which on that you would have gotten on this close below the bull bear key price level on this here, where both the ribbons are red, both are pulling away from the base, and they're all red. Okay, so now we're going to take a look at the Microsoft chart. Now with Microsoft, we have the 9:30 a.m. candle here. As you can see, we have a fairly big down candle on the opening candle here. This is with the filter turned on the ribbon. And as you can see here, when it starts off, it's going to be fairly compressed. And you're waiting to see the ribbon either turn all green or all red. And you're looking for a close above or close above, or excuse me, a close above or close below a key price level in order to look at an entry to be confirmed by the ribbon. So here we're seeing separation from the ribbon starting here on the ribbon being all green and the top lines of the ribbon starting to separate from the base. So this would be your bullish entry here on the bull bear key price level, as this is a close above. As you can see, all of these candles here were closes above. It tried to push down below, wicked below on each one of these candles, but held and closed above. But here is where we're starting to get the separation from the top lines of the ribbon, with the ribbon still being all green, and then also having the close above the bull bear key price level. So this is your entry here. We go right back up to the YDH level after also hitting the R2 level. So here we have a nice move here of about almost 5 points here, as we have the YDH 428.12, and then you have your entry here at about 423.06, or on this candle here at about 423.18 to 423.20. Now we'll look at this one on a dual screen as well. Okay, so we have changed the opacity on these candles so it's a little easier to see the ribbon lines here. So as you can see here, we have the ribbon on the right has the filter off. This is the 9:30 opening candle here. Here's the 9:30 opening candle here with the filter on. So as you can see here on this opening candle, we do have parts of the ribbon red, so we don't have an all green ribbon here on this opening candle, nor do we have one here. What we do have is it's starting to turn all green here with the filter on, and on this candle here in particular, it starts to separate from the body, which is this candle here as well. And here is where we also get where, if you can see here, it starts turning from red through here. Now it is all green and starting to separate. So again, one advantage of this ribbon indicator when using it in conjunction with the daily key levels indicator is the ability to have a dual screen setup where you can wait for confirmation from both indicators if that is your from both the ribbon with the filter on and filter off, if your preference is to have double confirmation. So then here on this candle here, you have the close above the bull bear key price level. You have the ribbon being all green. We saw in the previous shot where now both ribbons were all green on this candle. And so if you were also waiting for double confirmation from both the filter being on and off, this would have been the first opportunity candle here. On Microsoft, you have either the tight stop loss, the QL below the bullish trade level, the bull bear KPL, which is this QL below, or the midpoint below is the standard stop loss on this bullish trade from the bull bear key price level. And we get a nice move right up to the YDH level after tapping the R2 level. So we get a nice 5-point move here, starting from this level here, which was about 423.15 on the close of this candle, all the way up to the YDH 428.12. So approximately a 4-point move, 5-point move to there, or getting out at the R2 level, which would have been a 2-level move again. If you've seen our other videos, how you calculate the move is going to be from the level that you're basing the trade on, in this case the bull bear key price level. Minimally on a regular trade move, you're looking for a 1.5 level move, which would have been exiting here on the R1, R2 level, mid R1, R2 level. And then at that point, you're either exiting everything, or you're exiting 60 to 90% of your original position, and then adjusting your stop loss on the remaining runners to then further adjust or exit remaining runners on continuing level moves in your favor. A 1-level move, which would just be a scalp only, would just be the 1-level move to R1, which happens to coincide with this YDC and PMH on today as well. So if you're just looking for a quick scalp, then your quick scalp exit would have been right here at the R1 level. That is a 1-level move calculated from the bull bear key price level up to R1. Now going back to the previous chart, the BBBY, Bed Bath & Beyond, you can see the importance of trying to keep runners and scaling out, because you never know how far the move is actually going to go. So again, you would have your 2-level move here, depending on where you started this trade from. So if you started it from the PMH level, you can actually go into the user control panel, and if you don't want to use the key levels as the take profit, with the contextual levels, the PMH, PML, YDH, YDC, and YDL levels, we have a separate section in the control panel for those. So you can simply just go down here, enable bearish entry, take profit for PMH. Your standard is going to be 2, as you can see here. If we look to another one, the standard default is going to be 2. So $2 a reward for each dollar of risk, with the stop loss calculated from the level that you're taking the trade from, whether it's a bullish bearish trade. In this case, bearish trade from PMH. The max is going to be 30 with this indicator, a risk reward of 30. So we have it set to 30 here. As you can see, a risk reward of 30 based on the risk being a bearish trade from the PMH using the standard stop loss here. Could put the risk reward down here just right above the S7 level. Or if you were taking a trade again off of the R2 level, your stop is here, mid R2, R3 on a standard stop loss on a bearish trade from R2. Your 2-level move here would have been just down to the bull bear KPL. However, this is a much lower price stock, so you could look at again, doing the same process, either going to a 1.5 level move or the 2-level move on a regular trade, then exiting 60 to 90% of your original position, adjusting the stop loss on the remaining runners, and then as price continues to move down in your favor at each key level in your favor on the continuation of the move, then you can either further adjust your stop loss on the remaining runners, or do a combination of further adjusting the stop loss and also taking off part of the remaining runner position, and keep riding that down until we start seeing a turnaround. As you can see here In this case, we've all gone all the way down to S9 so far. S10 is all the way down to $4.44. Okay, so that's going to wrap it up for today's video. If you would like more information about the Stocks ETFs Daily Key Levels V 3.0 indicator, you can look in the description of this video and you will see a link to the setup and features video, which will go through all of the different features of this particular indicator. This particular daily key levels indicator has some additional features that are specific to stocks and ETFs. One of the most notable features is going to be the fib extension levels, which are automatically triggered should price either touch the R10 or S10 level during the current session. This is particularly useful for your gap up or gap down movers. Usually you see these in day trading chat rooms. They're also the lower price stocks that may be from, say, 50 cents or $1 up to $10, in which you can either get a parabolic move to the upside or a parabolic move to the downside. More common is going to be your parabolic move to the upside on those, which those kind of stocks you may see, especially if there's a very low float on the stock and either some sort of stock manipulation going on through chat rooms or whatever is going on, or if there happens to actually be some actual uh, news that's of a major consequence on it. A lot of times you can see these low float, call them bottle rocket stocks, because they'll typically go up for one session or maybe sometimes 2 or 3 sessions, and they will come crashing back down to where they started from. But sometimes you can see moves from $1 to $2 up to $10 or even $20 sometimes of those. So this can come in particularly handy on those types of stocks if you're the type of trader that likes to trade the type of stocks that you'll see typically traded like in the Warrior Trading chat rooms or the other major day trading chat rooms. Are typically the lower price stocks that happen to be in the news for one reason or another, or just happen to be major market gap ups, or typically it's going to be gap up stocks, but it could also apply to gap down stocks. The difference is on gap up stocks, there's no theoretical ceiling on where the parabolic move can be on a gap up low float, whereas on moves down, if it's in a severe crash, it can only go down to zero theoretically. So this is going to be something that if you do trade those stocks, you would use it more primarily on uh, gap up stocks or stocks that happen to be making parabolic moves during the session that happen to also be usually low float stocks. However, should price, for example, hit the R10 level in this particular example, then the automatic fib extension would go below the S10, and then you would have additional key levels to keep riding your remaining runners. Okay, so as I did mention, we have in the description of this video a setup and features video for the Stocks Daily Key Levels V 3.0 indicator. There are many different features of this indicator which we have not gone over today, so you may want to take a look at that video. It is a pretty long video, however it is broken up into chapters, so those chapters are in the description of that video, and you can simply go through whatever chapters and look at the specific chapters that you want to look at if you don't want to look at the entire video. Also, right now, just want to mention that we are having a big yearly sale on all of our indicators right now through April, the end of day April 30th, in which all of our daily key levels indicators are available at a significant discount, a lot larger than normal discount, with promo codes available for both the ribbon indicators as well as our individual daily key levels indicator for stocks and ETFs. We also have our SPX daily key levels indicator, our NASDAQ NDX daily key levels indicator, our futures daily key levels indicator, as well as our Forex and crypto daily key levels indicator. All of those are at significant savings right now. That sale will end of day April 30th. The link to that video with the promo codes for that is going to be in the description of this video as well as in the pinned comment for this video. Okay, so that's going to wrap up this video. If you did like the video, we'd sure appreciate it if you would hit the like button, as that helps us with the YouTube algorithm. If you'd like to be notified of when we do post new videos on any of our indicators or on trade topics in general, please hit the subscribe button and you'll be notified when we do post new videos. Again, thank you for taking your time for watching this video today, and we wish you much prosperity in all your future trading. Okay, so for those of you who might be wondering, well, how is this working for people that have purchased the daily key levels indicators? You can go to daytradinggps.com and look at the user reviews and feedback. We've just taken some of them here and highlighted parts of them, but we invite you to go to daytradinggps.com and look at the reviews and trader feedback on our various daily key levels indicators, including the SPX daily key levels indicator. Thank you.